Hi everyone, and welcome back to another video. Today we are going to be taking a look at the current king of the market, Mr. Bitcoin, and today's video you might see is titled The Power of Free, including a bit of psychology. And I'm going to go into a couple of reasons as to why the power of free and the Fed number in a market is really important in terms of psychology and people's decisions making. But I think what makes the most sense to do is just start out by analysing and pointing out I don't think anyone will argue with this major key turning points in the market for Bitcoin, and I think both of them are right here. So obviously on this inverse scale, up here is down at 3,000 and down here is down at 69,000. And you might ask why I'm using the inverse chart, and it's just because it offers a different perspective. Everyone is always looking at the chart in a normal fashion. So let's just flip it upside down today and just analyze the power of free, the psychology behind Bitcoin's moves. So what I've done there for Bitcoin is just label both of these blue squares the major turning points in the market, because I don't think anyone is going to argue that these were the major turning points in the market. And if you aren't already, don't forget to like this video, subscribe, and we're just going to get straight into it, because often what you will see from a major turning point in the market is some form of V-shape. Either that's going to be a reversal or a V-shaped recovery, and they do take different lengths of time and they do take different shapes, but that is what you get there. You get a fast move in and you get a fast move out, because that is going to be a massive turning point in the market. And the market makers do not want to let people make too much of a decision in these times. They want people to be panicking, or they want people to be really excited. And what you will get there is a move into the first consolidation zone, as you can see here from both blue squares, into this consolidation zone. And often this will be quite a lengthy consolidation zone. It'll have a bit of manipulation in there, and then before you get the next move down, you'll get a nice move in the opposite direction. So you can see here we got a nice pump to the upside, consolidate, move down, and right here we got a dump to the downside, consolidate and move up. So I'm going to label this consolidation zone number 1, which really starts to embed the psychology of these consolidation zones into people's minds, because by this point people are maybe expecting the market to continue in the fashion that they was expecting, to maybe go and break more highs or go down and set new lows. But then what happens? We move into consolidation zone number 2. So after labeling those number 1, I'm just going to label these consolidation zones right here number 2. And yeah, that is a number 2, by the way, don't question it. So these consolidation zones often will become short-lived, and you might ask, well, why are these short-lived? And it really starts to embed the psychology when you see these moves. Have a look at this. It's exactly the same move, in my opinion, just opposite. We get the tiny move up, and then go. We get the tiny move up, down, then go into the Fed consolidation zone. And this Fed consolidation zone is where we start to get really manipulated, because by this time people are expecting the trend to continue, and the market makers will give people a little bit of success, because by the Fed time we get into these boxes, people are expecting the trend to continue. So down here people was expecting us, yep, we're still bullish, we're still going to continue, and the market makers do give a bit of leeway. They make people think, yep, you are the genius, don't worry, you are correct, we're going to continue. So in this range here, this red range, you can see people start to get really excited, really euphoric, or in the opposite direction, really fearful or really scared. And people will start to long these breakouts here in these red boxes, because we've had the 1, 2, 3 to manipulate psychology, and then go into the 4th red box where it gives people a little bit of success, and then snaps out of there and really takes all of that money back in the market. And I think that is what we're getting now in the market. I think we're in the same stage as what we was on the way up as we are now on the way down. I think we're just in the red box, because you will see a lot of people just saying, yep, this is going to continue, no problem, and they're going to be short in the market. And I think we're just in exactly the same situation as we was down here. We've had the 1, 2, 3 consolidations, and we are now moving into a manipulation phase, in my opinion. So even if our count is wrong and we get more spikes to the upside, I'm still expecting a quick snap back in the market, something like this, just like we got here in the opposite direction. And I think really what we need to do is just look out for this, because it's a different way of looking at the market. And I know I'm rambling on here a little bit, and you might not have noticed these types of things before, and you might have. Or it's just a different way of explaining the market. We can just inverse the chart and have a look at it normally and see how that looks. That's exactly what it looks like on the opposite direction. But if we just remove all of that drawing there, you might not spot that just by looking at the chart here. And if you do inverse the chart, like I did earlier, just gives you a different perspective. It gives you a different outlook on the market, and it can just be a nice change and really set yourself psychologically to get ready for the manipulative moves that I think we are in now. So just watch out for it, guys. Obviously, it's not financial advice. This was just a quick one, really, for me from Bitcoin, on Bitcoin from me. Sorry, I'm definitely not called Bitcoin. So yeah, just a quick one. Different way of looking at the market. We've had the Fed test of the psychological level, now moving into the manipulation level, in my opinion, and this is why I think, in line with the Elliott Wave videos that I've done, something like this, quick snap in the market, something like that, moving into 2023, I can see it playing out. And it comes back to key levels, it comes back to Fibonacci levels. So yeah, obviously it's not financial advice, guys. Rambled on a bit here. Just a quick impromptu video here. So if you did like it, give it a like. If you didn't like it, don't, whatever. Drop a comment, subscribe. You know you'll see me next time. Cheers, guys.